Okay, welcome back to the channel, Mega World team. Thanks for tuning into another video. Today's video is going to be an update on Solana's chart, taking a look at the technical analysis, taking a look at the chart, and analyzing basically the short-term and the long-term trajectory of this pattern. So we are in a descending channel pattern now. Of course, descending channels do break upwards. The rate of which they break upwards is around 88% of the time, and we can get a pretty good understanding of where the price will go if it does break upwards. Generally, prices move in consistent patterns. Historic action has shown that prices will move between the resistances and supports and generally continue in that trajectory until it meets a support or resistance that reverses the trend. Currently, what we're seeing here is a very strong support zone on the Solana chart. This $80 range, this $80 to $65 range, this gray box, is an incredibly strong support for Solana. And we have been testing this support numerous occasions since the end of January. We've seen a couple retests now. We're seeing our third retest at the moment. And I mentioned when we did our last video, and I did our last video over here, it was the beginning of January, or the end of January, should I say, and I said that I'll be buying at $80. And I ended up buying at $80, and I made a pretty good profit selling at around $100. Obviously we have this red line at 110, which is our trigger zone, and we've come back down and we retested at $80 zone again. I didn't buy on the 24th of January, but I am considering buying again now. Of course, if we do lose this $80 zone, we do expect a significant drop all the way down to here, to $50 range, right? A very strong drop. That's a drop of about, I think it's going to be about 30%. Yeah, 37% drop down to our $50 range. Will it happen? It entirely depends on how Bitcoin performs. Of course, if Bitcoin loses that $35,000 major resistance, major support we've been telling you guys about for weeks and weeks, Solana will bleed heavily. In saying that, descending channels do eventually break upwards, and we are seeing, obviously what we're seeing here is a price downward in a downward price trajectory, and then we're seeing some sort of consolidation, or at least selling pressure decreasing. We can see that because the price is starting to plateau. It is starting to move sideways more than it is moving down. So it's a good indication that either we are going to move upwards, or at least we're consolidating before a explosive move. Now the explosive move, of course, could be an explosive move downwards. Of course, coming down to our $50 range is still technically within the bounds of this channel, within the bounds of this ascending channel. So it is realistic. It's a very realistic price target. But of course, if we do break upwards here and get, over this trigger zone again, I do expect a move up to $140 for the first target. Now the $140 move is a 73% wave upwards, a very significant move. And if you catch a 73% profit, that's portfolio changing depending on how much percentage of your profit you put in. The 72% move is a very significant move. And most people go their entire time in crypto without even catching a 72% move. So keep an eye on this, guys. Keep an eye on this channel here. And I recommend you just copying this chart. I'm going to zoom out so you can see it in a second. We'll go to it daily so you can see what it looks like. This is kind of what it looks like over here. Copy that chart down and keep an eye on that descending channel resistance, because the moment we break that resistance and we flip it as support, I would be looking for an entry. I'd be looking for entry somewhere around over here. Obviously, if the price zigzags up and then retests over here, I'd be looking for an entry, some sort of entry like that. Alternatively, if you have a pretty high risk tolerance, guys, you can of course enter now. The likelihood of this doing a liquidity wick or liquidity grab, whatever you want to call it, is pretty high. We could see that happen. So entering now and having like a 5% stop loss or so would be probably a safer bet. Of course, it is quite low risk. 5% isn't too much. You could even push it up a little bit to 4%, and enter now and hope for the best. Of course, by that time we get that breakout, you've made anywhere between 7.5% to 10% already. So that move would be exaggerated all the way up from 73%. From what you would have about 59% to 73% profit. So keep an eye on it, guys. What we're going to do next is we're just going to go over some of the technicals. Of course, we've spent a bit of time there talking about the macro structure of the chart. Let's take a look at some of the technicals. So we'll bring up some of our go-tos, some of our favorites. Obviously, starting with the MACD and RSI. Let's get rid of the Ichimoku for now. And let's get into it. So look at the technicals, of course, we need to go to a bit of a larger time frame. It just shows, what is this showing? It's just showing a period of consolidation, guys. It's all it's saying momentum is kind of starting to plateau. We've seen that occur ever since about the 1st of January. Momentum's starting to kind of plateau, and we kind of get this consolidation pattern happening now. Again, nothing too intense is happening with that on the daily. We can go down and take a look at like the 5-day maybe, and we can start to see what is actually occurring. And this is a good it's more smooth. So it's a perfect representation of what we just saw on the daily, but momentum is starting to plateau. And we're seeing this actually happen in both the MACD, of course, and that RSI. And we're waiting for that break point. If we take a look at the RSI here, it's full screened. What we wait to see on that RSI is we're waiting to see a break of this yellow line. So if we can see that price, that purple line, guys, get over that yellow line, we have a positive RSI cross. And that's a pretty good indication that we will break this descending channel. Unfortunately, that will probably occur as the price breaks that descending channel, but even then, safe entry with confirmation equals, you know, less stress and potentially safer profits. Breaking it down to the 4-day, we can see a similar thing, and of course on the 3-day, we most likely will have that cross already. Yep, we do have that cross already, and it's telling us exactly the same thing. We're in consolidation. Price is starting to plateau. It is preparing for an explosive move soon. If we take a look at that weekly, we can see a similar thing, and of course that RSI is very much bottomed out. We can take a look. It very much bottomed out over here. This is our bottom zone over here. If we draw a rectangle in, I'll show them in a second. If we draw our rectangle and we take it from this point here, just that apex to the bottom of that, we have that support on that RSI, and it matches up relatively similar to a support, more dynamic, you know, log scale support, which we would see on the Sol chart right now. But we do expect that point to be a major point of you know, a major contested point, a point of where we would see the price bounce. And of course, if it does bounce from this point, it will bounce from this point and continue upwards. Personally, I do like the look of Sol a lot here. There are a few things that I don't like, and I'm going to mention that in a second. But if we're taking an analysis based on the chart and based on the momentum and the MACD alone, I like the look of it. I really do like the look of it. But let's take a look at some of the negatives. So first and foremost, let's take a look at that bull market support band. We're starting on the 3-day. Of course, we are underneath the bull market support band. We would like to see the price surge above that bull market support band to confirm a trend reversal according to that bull market support band and get that entry. We can see we had a similar one over here, which was way back August. From then we went to $32, all the way up nearly 10x to $261, about 8 times in value. Of course, right now we are underneath that bull market support band on a 3-day. I like to use a 3-day chart of a larger time frame chart, 7-day, 3-day, for that bull market support band, as it gives a better indication of the overall trend. We can see right over here that we had that deviation below, but it wasn't a strong enough deviation. We kind of latched on to the bottom of our bull market support band, not really losing it before we continued upwards. We officially lost that bull market support band up over here at $164 on that 1st of January to 31st of December, and since then have been traveling downwards pretty aggressively. We can even see on the daily chart, guys, that that bull market support band is going to act as a resistance for us to even get over this wedge, and it's going to line up. We can see it will be lining up with that wedge by the time we'll be contesting it. So that wedge is going to be acting as quite a strong resistance. I do expect a lot of contestment at that wedge, and it definitely won't be easy on the break. Moving on, let's go Ichimoku Cloud, one of my favorite all-time indicators. I absolutely love the Ichimoku Cloud. And I've talked about it so much, guys, and you know why I like it. It's one of the best tools I find if you use it efficiently for entry and exits and general trade signals. And we can see a perfect example of that back over here. We had not only the price break through the Ichimoku Cloud, find support on the conversion line, but we also had that lagging span break through the clouds as well. This is probably the strongest buy signal you can get using the Ichimoku indicator. And waiting for something like this would be ideal. And we saw that in July, the 21st of July onwards to about the 1st of June, we saw most coins follow similar suit. At the moment, we are seeing the conversion line bottom out. Obviously, conversion line is a great indicator of momentum. We can use that RSI in conjunction. Obviously, the RSI and conversion line are used together. We can show a little bit of momentum divergence. And it's obviously a great tool to use, guys, that conversion line, if you're going to be predicting the overall momentum, or should I say overall trend of a price. when the momentum gets above the clouds, when this conversion line gets, when the lagging span, same conversion line, lagging span is this line here. When the lagging span gets above those clouds, it indicates a trend reversal. So we're waiting for that to occur. Of course, it would require the price to get over 110, potentially even over 140 for that lagging span to move up. Because remember, lagging span is, I think it's 27 days behind the current price, guys. So it lags, it really does lag. So it can give you a good indication of price momentum. So looking at the daily Ichimoku cloud, a lot of resistance still above this channel. So what does that mean? It means we can see what Bitcoin did. A spike into a channel, above the channel, and then an immediate crash back down. All right, it doesn't indicate, there's no hope in this chart right now that we will have a sustained breakout. So we will definitely have a breakout. It is probably not going to be sustained because we have a lot of resistance still within these clouds above the current descending channel. If we go to a larger time frame, we can see this exacerbated. Exacerbated meaning it is on a grander scale. There is even more resistance up at this range. All right, very, very unlikely we're just going to shoot up to an all-time high from here. If it happens, it happens, but it's very unlikely, guys. What is more likely is we continue with a consolidation pattern, maybe some more small bounces. Like I said, a potential bounce to 110 downwards and a potential bounce upwards. That is, sorry, the Bitcoin chart is going off at the moment. Ignore that indicator. Ignore that sound, should I say. And then moving down to that smaller time frame, we can use the 12 hours. We're going to see how much this cloud is kind of rejecting the price action right now. It's been rejected. It's been rejecting the price action basically the entirety of this descending channel. And I would really like to see a break over those clouds. And that would be a perfect indicator to entry. So I think that's about it for today, guys. I think I covered it pretty well. I don't really think I left any stone unturned for the analysis, which I would like to do for Sol. Of course, there are other indicators we can use, but I feel like these are the main ones that kind of give us all the information we need. Any other indicator that I'll be putting on the chart will kind of just be singing the same song, telling us the same information, just in slightly different ways. I feel like this has been a good, well-rounded analysis of Sol. To summarize, what you should do is you should either enter now with a tight stop loss or wait for a break of the descending channel, which I will be doing. I prefer safe entries. That will probably result in a move up to 110. At 110, you can reassess if you want to move your stop loss maybe below $100, but obviously $100 is a psychological support at that point, and see if you can catch the next wave up to 140. At the end of the day, guys, if we lose that $80 zone and we close below it, we haven't seen a close, remember? We haven't seen a close below 80. If we see a close below 80, you might want to sell because we expect a move down to $50 US. Okay, guys, I hope you enjoyed the analysis. If you have any questions, leave them down below. Of course, like, comment, subscribe, follow on Twitter, Telegram. If you want to join VIP, send me a message on Telegram. We can get you into VIP channel. You get all instant access to a variety of trade signals and market updates. So about 20 to 40 trade signals per month. And we have a very, very high accuracy and profitability track record, which you can see in the free channel. If you have any questions, leave them down below and I'll catch you in the next video.